Weeks of tension. After weeks of tension, the world's markets are finally breathing again. Asian stocks are trading in the green. Hong Kong, Tokyo, and Seoul all rallying, driving by one thing hope that Washington has finally found a way to end the US government shutdown. But beneath the surface of this so called relief rally, the question remains, is this the start of a comeback or just calm before the next storm? Across Asia this Monday morning, optimism replaced anxiety. The Hang Seng index in Hong Kong jumped 167 points, closing at 16,409. South Korea's KOSPI surged nearly 2.8, and Japan's Nikkei 225 climbed 440 points. 490 points, brushing the 50,700 mark, its strongest show in weeks. Even Europe joined in, with Euro Stotex 50 and DAX futures both up over 1.3%, signaling global risk appetite returning. But what caused this sudden shift in mood? The answer lies not in Asia but in Washington. For 40 long days, the US government shutdown paralyzed everything: the airports, law enforcement, even parts of the military. Hundreds of thousands of federal workers went unpaid, and economic data dried up as government agencies went offline. The uncertainty spooked investors worldwide, especially as analysts warned that if the shutdown continued, America's fourth quarter GDP could turn negative. Then came a glimmer of light. Majority Leader John Thune announced that bipartisan talks were taking a positive turn. By Sunday night, a framework to reopen the government was finally in motion. And just like that, the markets exhaled. Let's not be fooled, the shutdown didn't come without scars. Consumer confidence in the US fell to its lowest level in 3.5 years. Households grew cautious, spendings slowed, the labor market softened. The Federal Reserve, deprived of fresh government data, had to operate in semi darkness, flying blind without clear visibility on key metrics. And while Washington now races to patch the wound, the question for economists is, has the patience already lost too much blood? Despite the macro damage, investors choose optimism on one day. The Hang Seng, Nikkei, KOSPI weren't just bouncing, they were signaling renewed faith that the world's largest economy will avoid a full blown crisis. In the bond market, US Treasury yields ticked higher. The 10-year yield rose to 4.1278% and 2-year climbed to 3.5886%. That's Wall Street telling the Fed, we believe you're still in control. Meanwhile, the US dollar index recovered slightly as traders priced in the possibility of a more hawkish Federal Reserve stance if the economy stabilizes faster than feared. In Asia, optimism came with strategy. Hong Kong's rally reflected confidence in the Chinese tech and AI sectors recovering from valuation fears. Japan's gains came from export optimism. A stable dollar helps Japanese automakers and electronics exporters. South Korea's jump in the KOSPI, driven by semiconductor giants rebounding after a week of correction. But make no mistakes, this is a tactical rally, not a fundamental one. Every investor from Hong Kong to Frankfurt knows that if US policy collapses again, these gains can evaporate overnight. What happens in Washington stays in Washington. When the US economy sneezes, the whole world catches a cold. A 40-day shutdown means delayed contracts for global suppliers, slower US imports, and uncertainty in dollar liquidity that ripples across emerging markets. That is why, when a temporary resolution in the US sends global equities higher, it's not celebration, it's a relief. Analysts warns that it is not the end game. Fiscal strain, weak customer confidence, and high interest rates continue to weigh on the global economy, but this is real, but is also fragility behind it. Markets are betting on political sanity, something history shows can't be taken for granted. So, here's the real story behind market surge. It's not about profits, it's about relief. Relief that US won't drag the world into another cliffhanger, at least for now. But as the trader knows, Relief rallies can vanish as quickly as they appear. The smart money isn't celebrating, it's preparing for the next shock. You've been watching our deep dive on the Asian market rebound. Stay sharp, stay strategic, and remember, optimism without caution is just another gamble.